Breaking right now. Are we hours away from the biggest energy shock in history? Iran has just issued a direct and terrifying ultimatum. They are threatening to strike energy sites across the Persian Gulf. Saudi Arabia, Qatar, and the United Arab Emirates are in the crosshairs. If this happens, the global economy will simply stop. Stay with me. The implications are huge. Reports are flashing across the wire right now, according to Iran's state-linked Tasnim and Fars news agencies. The Islamic Revolutionary Guard Corps is drawing a massive red line. Iran claims that if their territory is attacked by Israel or the U.S., they will retaliate against neighboring oil facilities. They view any airspace cooperation with the U.S. as an act of war. But the U.S. strongly denies that its Gulf allies are involved, and Gulf nations are desperately trying to maintain strict neutrality. CENTCOM has not officially detailed their defensive maneuvers yet, but regional defense systems are clearly on maximum alert. Now here's the key point. This isn't just about a few isolated refineries. This is about the Strait of Hormuz, the most critical energy choke point on planet Earth. Over 20 million barrels of oil pass through there every single day. That is roughly 20% of total global consumption. According to Reuters, an outright blockade would be absolutely catastrophic. IRGC commanders have frequently threatened to close this vital strait. But what if they actually do it this time? What if Hormuz chaos officially returns to the markets? The energy markets are already flashing severe warning signs. According to Bloomberg, Brent crude is catching a massive bid today. Traders are absolutely terrified of a sudden, violent supply shock. Options markets are currently pricing in historic levels of volatility. Analysts suggest that if major Saudi or UAE facilities are hit, we could easily see oil spike to $150 a barrel. Could this be the moment energy prices completely break the system? Imagine $150 oil in today's fragile economy. It would instantly crush the U.S. consumer. Gasoline prices would explode overnight at the pump. And this is where things change. The Federal Reserve would be completely and utterly trapped. They have been fighting sticky inflation for years now, but central banks cannot print more barrels of oil. According to macro analysts, a supply-side energy shock is the ultimate nightmare. If inflation surges back due to a Persian Gulf conflict, interest rates will have to stay higher for much longer. Or even worse, the Fed might have to hike rates into a recession. This is the absolute definition of stagflation, and traditional stock portfolios simply do not survive stagflation. But something important happens here. Smart money is already making its move. Capital is fleeing risk assets at record speed today. According to Kitco, gold is seeing massive safe haven inflows right now. Physical gold and silver are doing exactly what they should do. They are acting as the ultimate geopolitical insurance policy. Central banks globally have been hoarding gold for this exact reason, and retail investors are finally waking up to the immediate threat. But what about the digital asset markets? According to CoinDesk, Bitcoin is facing a massive macroeconomic stress test. Initially, extreme risk-off sentiment causes all crypto to sell off, but many analysts suggest a deeper narrative is forming right now. Is Bitcoin becoming the new digital gold in a war economy? If physical supply chains break down completely, and global commercial shipping grinds to an absolute halt, a decentralized, borderless asset becomes incredibly valuable. No government can block a true peer-to-peer Bitcoin transaction, and no physical missile can destroy a distributed blockchain. Let us look closer at the specific targets being mentioned. Saudi Arabia's Abqaiq facility was hit by drones back in 2019. That single strike temporarily knocked out half of Saudi oil production, and many experts believe that was just a warning shot. Qatar is one of the world's leading exporters of liquefied natural gas. If Qatari gas export terminals are targeted by precision strikes, Europe will face an immediate and devastating winter energy crisis, and the UAE is a major financial and logistical hub for the entire world. A strike on Abu Dhabi would freeze global capital flows instantly, but we must look at both sides of this dangerous equation. Iran claims it has the missile capacity to overwhelm regional air defenses, but the United States denies this completely. According to CNN, Patriot and THAAD batteries are heavily deployed across the Gulf. The U.S. military maintains a massive, highly sophisticated footprint in the region. They are fully prepared to defend commercial shipping lanes. The U.S. Navy's Fifth Fleet is headquartered right in Bahrain. But what if a drone swarm attack actually overwhelms these defenses? What if advanced sea mines are deployed in the narrowest parts of the strait? Commercial tankers simply will not sail through a minefield. Insurance premiums for Gulf shipping are already skyrocketing. According to maritime analysts, insurers might refuse coverage entirely. If tankers cannot get insurance, the oil simply does not move. It stays sitting in the desert while the world starves for energy. Now here's the key point for your portfolio. You cannot afford to ignore these geopolitical warnings. The markets are balancing on the edge of a razor right now. Institutional money is moving to cash and hard assets. They are preparing for the worst-case scenario. Because when panic officially hits, market liquidity dries up instantly. You need to watch the price of Brent crude minute by minute. Keep a very close eye on the US dollar index. When global terror spikes, investors blindly rush into American dollars. But a violently strong dollar destroys emerging market economies. It makes their dollar-denominated debt impossible to repay. We could see a wave of sovereign defaults if this continues. The global financial system is entirely interconnected. A missile strike in the Middle East can trigger a margin call on Wall Street, and that margin call can wipe out your retirement account. According to top market strategists, you must hedge your risk today. Do not wait for the missiles to actually fly. By the time the news breaks on mainstream television, the smart money has already positioned itself and taken profits. This is a historic moment for the global economy. The dollar endgame is accelerating before our very eyes. Stay alert and do not trade on pure emotion. We will continue to track this developing situation closely.